If you're investing in Canada, you already know the problem. The Canadian market is heavy on banks, energy, and utilities. But it's missing something. The massive tech giants that drive the modern world. You want a little bit of Apple, a little bit of Nvidia, and you want the S&P 500. And this is exactly what ZSP offers. It is the BMO S&P 500 Index ETF, and for many Canadians, it is the default choice for US exposure. But if you're looking at ZSP stock price today, for example, you might be wondering, is this the best way to cross the border? How does it compare to its main competitor and rival VFV? And crucially, is it hedged against the Canadian dollar or not? Stick around, because by the end of the video, we're going to break down the fees, the dividends, and the currency risks. So you can decide for yourself if ZSP belongs to your portfolio this year. So you're watching this because you know that home bias, investing only in Canada, is a wealth killer, unfortunately. You need global growth. ZSP is one of the largest and most popular ETFs in Canada because it does one thing, but it does it extremely well. It gives you instant access to the 500 largest companies in the United States, S&P 500. We're talking about the engine of the global economy. By buying ZSP, you're buying not just a stock, but a slice of the US economy, from Silicon Valley tech to New York finance and Texas oil, all in Canadian dollars. So what is ZSP? It's an exchange-traded fund, ETF, managed by BMO. It tracks the S&P 500 index, similar to VFV. When you buy ZSP stock on TSX, BMO takes your Canadian dollars and buys the underlying US stocks directly. This means you own the same companies as an American investor buying SPY or VOO. You get the growth of Microsoft, Amazon, Google, Apple, all those companies. People often ask whether ZSP is hedged or not, and the answer is no. This means your returns are affected by two things: the performance of the US stocks and the value of the US dollar versus Canadian dollar. If the US dollar gets stronger, your ZSP price goes up, even if all the stocks stay completely flat. However, if the Canadian loonie rallies, it can surely eat into your profits. So that's something to keep in mind. And of course, now we have to address the elephant in the room. ZSP or VFV? These two ETFs are like Coke and Pepsi. VFV is Vanguard's version and ZSP is BMO's. They both track the S&P 500. They both have a management expense ratio, or MER, of roughly 0.09%. They are almost identical. So why is ZSP cheaper than VFV? Well, this is a common confusion. When people ask this, they usually mean the share price. And here, VFV has a higher share price, often over $100, while ZSP stock sits lower. This doesn't mean ZSP is undervalued. It just means the pie is sliced into smaller pieces. However, this lower share price is actually a hidden advantage for some, and it makes it easier to set up a DRIP, which is an acronym for Dividend Reinvestment Plan, because you need less cash to buy the first full share with your dividend payout. Speaking of payouts, does ZSP pay dividends? The answer is yes. If you ask me how often ZSP pay dividends, I would say ZSP dividend is paid quarterly. But do not expect a high yield. Usually it hovers around 1% to 1.3%. It's nothing to write home about. And remember, the S&P 500 is focused on growth and not income. You're here for capital appreciation and not necessarily a monthly paycheck, although that would have been nice as well. And if you're looking for the specific ZSP dividend dates, they generally fall in line with the standard quarters, which is March, June, September, and December. So now let's look at the math of the currency, because this is where investors get tripped up. Imagine the S&P 500 goes up by 10% this year. This is absolutely amazing. But imagine that Canadian dollar also gets stronger by 10% against the US dollar. Because ZSP is unhedged, those two forces actually cancel each other out. Your return in Canadian dollars might be zero. Conversely, if the markets crash 10%, but the US dollar all of a sudden skyrockets, which often happens during a crisis historically, your ZSP portfolio holdings might only drop 2%. Because the currency gain cushioned this fall. And look, this is why many Canadian investors prefer ZSP over a hedged version like ZUE. It acts as a natural shock absorber during global crises when the US dollar tends to spike in relation to the Canadian dollar. We already touched on this, but it's worth repeating. The ZSP MER is 0.09%. And to put that in perspective, on a $10,000 investment, you're paying around about $9 a year, which in comparison to mutual funds in Canada that often charge 2% a year, which is a $200 difference. The fee difference alone is one of the biggest reasons to switch from a bank mutual fund to ZSP. Is ZSP a good ETF for you? It is the right choice if you want pure US exposure and you're comfortable with currency fluctuations. It is perfect for your RRSP, TFSA, or even a taxable account if you want to keep things simple. However, if you believe the Canadian dollar is actually going to par with the US dollar, for example, you might want to look at a hedged alternative. But for most long-term investors, the unhedged ZSP ETF is standard for a reason. To summarize, ZSP is the utility knife of a Canadian portfolio. It's very liquid, it's cheap, and it gives you ownership of the best companies on earth. Whether you choose BMO ZSP or its rival, VFV, it often comes down to whichever one you started with or heard about from a trusted friend, or whichever one allows you to reinvest your dividends or buy shares faster due to its share price. Otherwise, they're very, very similar. Anyways, guys, thank you for watching. If this helped clear up the differences between ZSP and VFV or helped you understand the currency risk, hit that like button. It would mean the world. It helps the algorithm know that this wasn't a waste of bandwidth and actually something somewhat useful. If you have questions about ZSP holdings or other ETFs, drop a comment below. I read as many as I can and try to answer all of them. A little statement, I'm not a financial advisor, as you guys know. I'm just a guy on the internet looking at charts. Do your own research. Make sure to talk to a professional financial advisor before making big decisions. I just share my opinion and my findings, but it's for educational purposes only. Anyways, guys, thank you so much for watching once again. I'll see you in the next one. Take care.